Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And here are the projections of those levels, 50% retracement. Notice that the euro US dollar actually congests right through the middle of this 50% retracement level. In this case, you have the currency pair where the euro is first and the US dollar is second. So this is one where you have to flip it around for the options. So when you're looking at these retracements, you can see that at A, that 50% retracement stalled the move a little bit, and then you had an extended move a little bit further into that 61.8% retracement. Here's some resistance, support again in the middle, support, resistance, and support. So you are now combining, as this congestion continues, you're now combining not only the Fibonacci support and resistance levels, but also support and resistance based upon previous highs and previous lows. Now, as this new move forms, notice we have three waves of downside, 1, 2, 3, so we have a trend extension. Because this breaks that trend channel, we are using this high and this low, just like I drew on the other chart of the FXY, and then we are using those as the projections. I'm not going back later and connecting this high to this low to give me my Fibonacci levels because they just don't work as well. You can go and connect this high to this low and get retracement levels on smaller time frames, which probably would have given you 138.2 retracement back up in here. But stick to the primary trend moves. And here you can see the projections that are based upon that initial trend. And you can see that that also helped stall this move here at the 61.8% retracement. Here is a link that shows you the website for my course that I offer, and it's 5 technical signals you cannot or should not trade without. And basically it's a 7-hour CD course with 230 pages of text where I've also added on another recording from a 3-hour presentation I gave in Denver where I teach how to trade without using any indicators. So if you're interested in that, you can check it out at swingtrader.net. I am going to be raising the price of this heading into the new year, so if you are interested, you can get these for $279 right now. For those of you that are interested in more education on the FX options, there's a number of presentations that are coming up here. They give one at least once a week, and I believe it's usually twice a week a lot of the time. So they have the after hours ones at 4:30 on Tuesdays, and then they have other evening sessions as well. So here's a list of those that are coming up, as well as the sites for ISE.com where you have additional educational material. Now let me go ahead and take some of the questions that you have. Again, for those of you that want a PowerPoint copy of this to print out and study, or just to take notes on as you're watching or reviewing the videos, please send me an email at tonihansen.com. I thought I had it posted on that chart, but not. Okay. So you can go to swingtrader.net, and there's also a contact button on that page, so you can send me an email that way as well if you don't remember my email address. But I have a couple of email addresses. It's Toni at tradingfrommainstreet.com as well as Toni at tonihansen.com. And so you just shoot me an email, and I'll send you a copy of that. Okay, one question here from Ram is, when you draw a fib line from point A to point B, I'm curious to see, when do you decide that the 50% or the 61.8% retracement level is going to be the one that is going to lead to a reversal or hold? And this tends to do with the pace or the momentum of the move into that support or resistance zone and what's going on in the larger time frame placement of them as well. So if you have, let me scroll back and see if I can, oh, here's a good place I can doodle on. So if you have, for instance, here is the previous move, and our fib levels are based upon this high and this low. Here's our 50% level. Well, if you have a slower move up into this level than you do that downside move, then it's easier for that 50% retracement to hold and lead to something such as a two-wave continuation move on the downside than if it pivots more sharply. And then usually it'll come back up into the 62% or 61.8% level and use that as a better resistance instead. Usually the 50 and 61.8 are the retracement levels that you're going to see leading into longer corrections, longer congestion moves. And either it's going to lead to a breakout or a reversal pattern where, if this is the previous drop, might come up, retrace about 61.8%, and it could trigger a reversal that way. Okay, another question is that earlier I showed a head and shoulders formation. Am I looking, okay, let's see. In your earlier example where you showed a head and shoulders formation, you're looking to take a trade when the trend line breaks off the right shoulder. When is the head and shoulder pattern considered failed? Well, here's a head and shoulders pattern. Here is the channel break. Usually it'll have 2 to 3 waves of upside within that shoulder. What you can often do is, one tool that you can use is go and look at that previous shoulder over here. And how long did it take to form that previous shoulder? Well, if your next shoulder attempts to go longer than that previous one, then typically it's going to have a higher risk of failure. So that's one of the tools that you can use. Also, head and shoulders patterns, ideally they're going to hold under that 50% retracement. For instance, they're going to hold the 38.2 or 50%. If they go higher, then the previous lows can serve as support a little bit better, and sometimes you can get a 2B, which is basically a form of a double bottom where it ends up being a very slightly lower low, and then it reverses. So that's another thing to look for. Again, the lower level retracements are going to be better for that shoulder than if it pulls up higher. You will find many cases where it does pull up higher. It's just usually it will lead to a little bit longer of a range as a result. That's where, again, the comparison to the previous shoulder comes into play.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.